Good look there. Let's talk some markets. Let's do a little trading with Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Alan, did you have to come back home for this sell-off?
No, I'm still up north enjoying it, and a lot of people are still on holiday. So let's understand, moves get magnified.
That's why I was asking. Yeah,
moves get magnified in the beginning of August because people are still taking their last summer break. So I've got to slow your friends down, okay? You and Alex, everybody needs to relax. Rule number one: keep your hands down, okay? Just keep your hands down, and you'll stay out of trouble. We are in the most crowded traded market right now that I've seen, in a long, long time. Now, this is not Volmageddon. Volmageddon was a very unique situation. We don't need to get into the squeeze and the investigation that went on.
Right.
So that was
well, the product. No product has blown up yet, to your point. But I think Alex's comparison about sharp equity-specific VIX moves is salient.
Right. And those products don't exist anymore because of that situation.
Yeah.
So we've got a crowded stock market, obviously. We've got a crowded VIX market, a crowded dollar market, a crowded 10-year market. So what happens when people have to unwind? There's an exit to the doors. Now, that's why I trade long-term options. In the last weeks, we've been talking about January options and so forth. And today, we're even going to get deeper into it. But, I've got a lot of axioms because I've been doing this for, longer than a lot of these guys have been alive. And a lot of axioms here that, we want to talk about percentages, not points. I mean, yeah, the points are big because the stock market has gotten so high and so strong.
Right.
2-3%. Okay, we used to get 2 and 3% moves. That happens. This is not a panic. So
it wasn't one of your axioms S&P 6K, Alan. So how does this set that back, or what do you think?
I thought that might happen by the end of the year. There are still gaps up above. Let's see where we are by the week's end. And if we can get this VIX back below 25 on a weekly basis, I think a lot of this can relax. Every other time in history, we've seen the VIX pop up and get smacked right back down, whack-a-mole.
Right.
Okay.
So you're on. That's what we were talking about too. I mean, you're on board with that, like the idea that VIX probably not going to hang out at 50, right? Unless something really cataclysmic happens. But could we get VIX to settle while stocks still chop lower? Take me through the way you think about that, because I think that's really important.
And the best part, you kids pointed out a good point that.
Thanks, Alan.
That the 10-year is now moving in opposite of stocks, which is the relationship it had forever until 2022 that you pointed out. That was broken. There was, bonds go up, stocks go down. Stocks go up, bonds go down. That's been that's what they teach you in Econ 101. That was broken in 2022. That remains in play now. So that's a very, very healthy sign. But in the big picture, think about it. If the dollar remains down, and yields remain down, those are positives for a lot of assets. That's what everybody's been asking for. Be careful what you ask for. Everybody's been asking for rates to go down. When we see about 5 handle in housing rates, in mortgage rates, people are going to come back into market, back into housing. So, let's see where we are. And one of the axioms I always follow is, as a trader, see where you are after the first hour of trade. How much of the gap has been filled? If it gaps sharply lower like that, how the markets react, or see if it's made new lows or not. So, we still have a little bit of time, but it had a pretty healthy bounce off the bottom straight up after that open.
Yeah, we're trying to move it here, fade a little bit back down, but holding up some higher lows since the beginning of the morning. All right, so Mr. Nuckman, where is your confidence? Like, because you're trading uranium today. That doesn't sound super.
No. UNG, not uranium. UNG.
Oh, natty gas. Okay, natty gas. All right, still, you're hiding out in commodities.
Yes. Guess what? Commodities have real value. You still need to eat, and heat your house, and these things. Your stock portfolio can do what it wants, but you still have to live. Right. So no, that's not really that
doesn't sound like the optimistic Alan Nuckman I know. Like, all right, I'm going to buy the heating your home trade.
In reality, the way I trade is I buy long-term options, right? So it doesn't benefit me to buy deep in the money options right now when the volatility is high, because what happens is when the volatility comes out, the air comes out of the balloon, that premium shrinks. Even if I'm right on direction, I'm going to be losing because of that volatility decrease. So what I'm looking for stuff is deep in the money with plenty of time. But as a trader, I use this as a way to sell puts in stocks I want to own. Do you want to buy Apple when it's down $10, $15? Do you want to buy NVIDIA when it's down? Yeah, of course you do. You can sell these puts when they have the inflated value, and if you get the stock put to you, you're buying it at sharp discount. Everybody's been waiting for a sale. You remember April, we had a 10% sale on the NASDAQ. and 5% in the S&P. People bought it, and the other people regretted not buying it. So, and to prove it otherwise, I think you have to follow that. And again, that's why I want to look at things on a weekly basis to see where we're at.
Okay.
Right, get back to natural gas.
Yeah.
It's been between 2 and 4, for a long period of time here. It broke below the 2, but when it did that, it did not make new highs and implied volatility. To me, that's called bullish divergence. That is a sentiment shift that you would think when you're making new lows, volatility would increase, like the stock market did today, because people are more afraid. I was going to use my word scared, but I chose not to. So people are more fearful, but that didn't happen. That's usually a sign that the sellers are running out of strength and that this trend may be over. At some point, they're going to have to cover because everybody's crowded on one side of the trade. So I'm looking at a June 10 call. It's trading for about 5 right now. I was trying to buy it at 450. I don't know if it got picked up. I'll have to look. But that's why we use limit orders. Today, if you're not using limit orders, you're going to have problems. You're going to have big problems.
Okay, like that point. Noted. Things are moving pretty quick. So in the meantime, we heat our homes and we get power and we buy. Speaking of dips, this thing's dipped a lot. Okay, you got one more. Hit me, Alan. 30 seconds.
So as far as this goes, and again, I try not to think when I trade, but this actually I thought about. Is, with this whole AI thing and the amount of energy that we have to create and use, is growing exponentially. And the problems we've got, summer season, hot season, hurricane season, a lot of things, a lot of potential disruptions. And you can see how quickly things change. The price of gas jumped in Chicago. We all saw that just because a tornado got near a refinery. So, there's a lot of reasons for energy they have price potential pop. And so having a position for a year, knowing that, air conditioning is a big deal in the summertime in the grid. So
Sure.
I can go through the end of this summer and I'm going through a part of next year.
Oh, I know what's going on. You're up
And
there. You're up there at the lake, and you're getting sweaty. It's been humid. It's been hot, and so you're trading out of gas. You're sitting there cranking the AC. Now it all makes sense. You're sweating because stocks are down. So you're thinking about pumping that AC even higher.
I grew up very modestly, and we never had air conditioning. I never knew anyone that had air conditioning up here because we're by Canada. If you look out the window,
right, that should be cool enough.
So now, as a matter of principle, I will not put air conditioning in my house. You'll need it one day out of the year. That's it. So I won't do it. Right. I won't do it.
Thanks, Alan Nuttman, for the trade. Fun chat. All right, appreciate it. All right, Alan Nuttman, Chief Market Strategist, bullseyeoption.com. All right, buying some natty gas in the middle of the storm. How about abroad? Can we find some solace in other